Gentlemen, good day and welcome to the Q3 and 9 months FY2024 conference call of Shemaroo Entertainment Limited, hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Shemaroo Entertainment Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9 months ended of the financial year 2024. Before we begin, a quick cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Hiren Gada, CEO, Mr. Argo Chakravarti, COO, and Mr. Amit Harya, CFO. Without any further delay, I request Mr. Amit Harya to start with his opening remarks on the financial highlights. Thank you, and over to you, sir.
Thank you, Purvangi, and good afternoon, everyone. And welcome to our earnings call for the third quarter and 9 months ended for the financial year 2024. Let me first start off by giving you some of the key financial highlights, after which our CEO, Mr. Hiren Gada, will give you some of the operational highlights. For Q3 FY24, the revenue from operations stood at around 156 crores, which witnessed a growth of around 4% on year-on-year basis. EBITDA loss for the quarter was around 18 crores, and net loss was reported at approximately INR 30 crores. For 9 months ended for the financial year 2024, revenue from operations stood at INR 508 crores, representing a growth of 30% year-on-year. EBITDA stood at approximately 7 crores, while net loss was INR 26 crores. With regards to the new initiatives in Q3 FY24, the expenses amounted to about 28 crores, while for 9 months ended for FY24, it was about 71 crores. And if you were to adjust for this investment, the adjusted EBITDA from the existing operations in Q3 and 9 months would have been approximately INR 11 crores and 78 crores respectively. Digital media revenues grew for the third quarter stood at around INR 65 crores, up by 8% year-on-year, while for 9 months ended for the financial year, it was around 185 crores, witnessing a growth of around 8% year-on-year. Traditional media revenues for the third quarter stood at 91 crores, which grew by around 1%, while for 9 months it stood at 323 crores, witnessing a growth of roughly 47%. Now I would request our CEO, Mr. Hiren Gada, to brief you on the operational highlights for the period under review.
Thank you, Amit, and good afternoon, everyone. During Q3-24, the overall sentiment, particularly rural demand, continued to remain weak, resulting in lower advertising spends across the entire sector. Challenges within the startup ecosystem persisted during the quarter, contributing to reduced advertising spends, especially on the digital platform. In addition to the above, a significant portion of advertising budget was allocated to the World Cup and state elections, impacting overall advertising spending on other entertainment categories. About one-third of the advertising spends during the World Cup has been contributed by major FMCG advertisers typically known for their substantial investments in entertainment categories and not sports. Furthermore, thrilling World Cup matches drew attention away from other entertainment options, resulting in decreased viewership across most non-sports categories. Due to this, the company faced a twofold challenge: reduced viewership and muted advertising revenue across both traditional and digital businesses. In addition to the above, planned investments were made in content, people, and marketing to capitalize on the festive quarter, which further put pressure on the margins. Moreover, while some planned B2B deal closures also, which occurred in Q3, the revenue realization was deferred to subsequent quarters, which is current and next quarter. The company has, which also impacted the revenue growth. The company has already undertaken several cost rationalization measures to address the external advertising slowdown. And we are confident that these efforts will yield positive results in the upcoming quarters. However, we believe that until the rural demand picks up, advertising spends will continue to remain under pressure. This is the overall big picture context under which the operational and financial performance has come in. On other operational aspects, on Shemaroo front, we released 13 new Gujarati titles during the quarter, with content across movies, web series, and plays, including digital world premiere of blockbuster movies Huvane 2, Bahuna Vichar, and release of original web series Goti Soda 4, Season 4. On YouTube, with 67 million subscribers, Shemaroo Filmi Gaane is the 22nd most subscribed channel in the world. On the as far as the broadcasting business is concerned, we launched original programs across the channels. So we launched on Shemaroo TV a mythological show called Karmadhikari Shanidev, and on Shemaroo Marathi Bana we launched Sau Pratap Mansi Supeta. Shemaroo GEC channels have a viewership share of around 7.6% in the overall Hindi GEC genre. On the Web 3.0 front, we launched Shemaroo Works, which is the first official metaverse platform on Android devices and desktops, and we have partnered with Sandbox to create immersive experiences for various Shemaroo IPs on the Sandbox metaverse. With that, I open the floor for question and answer session.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Dhaval from DVT Capital. Please go ahead.
Thank you. In terms of the expenditure that company has done and the losses that we have done in new initiatives, they're significantly higher than what you had earlier guided. So was it that you were taken by the extent of slowdown and the surprise in the revenue which just did not come in, or the expenditure just shot up for us much more than our expectation?
No, I think it's a good question. The first scenario is what played out. So, as I even alluded to in my opening remarks, that the planned investments played out, but the revenue shortfall was, significantly lower than the budget or the expectation. So, therefore, the gap kind of shot up. It's basically the revenue gap.
So, when I look at not only the broadcasting piece, where I can understand the a large portion of revenue did go to World Cup and some of the other things. But even in digital, if you look at the kind of viewership, it kind of flattened out and significantly lower than what it was post-COVID. But we have stopped seeing growth in that as well in terms of viewership, which is kind of impacting our revenue even in digital media. For now, like 3, 4, 5 quarters, our revenue growth in digital media is like single digits, right? Which is kind of very low. So would you care to explain there?
Yeah. So the revenue growth in digital media actually this year, which has been the challenge. But as far as viewership, so there are two parts to this. So revenue growth has happened. We've actually till FY2023 there has been a level of revenue growth in the digital media. But the FY24 has been the challenge because the large component of various digital video platforms, which primarily comprises of YouTube, Facebook, etc., they have all been very flat in terms of their monetization and revenues. And second point was on the viewership side. So yeah, viewership, this is still, I would say, the adjustment of post-COVID probably playing out is what we can gather. And this is, in a way, a phenomenon which is playing out broadly in the entire digital media per se. It's not just these, from what we hear from various OTT platforms in terms of their numbers, viewerships, etc., etc. It's all been on a lower trajectory, and that, while it is all a new normal compared to what it was pre-COVID and all, I think finally the consumption growth at some point will start kicking in. That's how I would look at it. Orgo would just add.
I just want to add a few things here, Dhaval. I think you're right. I guess the headwinds on the advertising front did impact broadcast significantly in the last quarter. But also from a digital point of view, there are two things happened. The World Cup saw unprecedented levels of viewership, especially with the kind of performance that India did, right up to the finals. Also the fact that it was free, and hence even on the Facebook viewership, for those times, got significantly affected. Also, in a soft advertising environment, with the major cricket advertising by advertisers in the form of gaming companies and auto and so on and so forth. The gaming companies have not really been in advertising, for external other reasons. So some amount of advertising in digital and on broadcast, which is done by FMCG companies, that also moved towards cricket. So it has been a double whammy in that sense this quarter.
Right. And my last couple of questions, Virenbhai. First, on the employee expense, if you look at the employee expense cost curve, is significantly high. Like we were last year, same quarter, 21 and change crores. Last quarter, 28 and something, and now 31. So, like every quarter, there is 10-15% jump in employee expenditure, which is kind of unprecedented in our history, and it is actually much higher than any other company in the industry. So, like, what happened? I understand you're employing more people for newer things, but in a time frame where revenue is a challenge, do we look back and kind of scale down on such expansion?
So, couple of things. I think, firstly, about 1.5 years back, roughly, we embarked on this whole significant, shift and upgrade in terms of professionalization and various aspects linked to that. Also, the future that we saw for media entertainment in the economic backdrop, we believe that the opportunity is humongous, and the best way to play this, and if we have to play this on the front foot, the best way to scale up is through having a significantly professionalized team driving the entire thing. And therefore we invested, and I have discussed this quarter after quarter, and we invested significantly in dialing up the teams and people. Now a lot of those joining which has happened into this Q3 is when the last of that significant addition has happened, which was all planned, and appointments happened earlier, closure and joining. At this point, we expect that. And this is not an investment which for the short term. This is investment for the long term, and we are as of now, we believe that we have broadly reached a kind of near peak or about peak of that team size, strength, quality, etc., etc. So from here, I don't expect it to further go up significantly. What obviously, as the new joinees, they are settling in and starting to contribute on various fronts, etc. We are definitely seeing that, and as the economy also recovers on the consumption side, we believe that we will be much more strongly poised to take advantage of that.
Sure. Last question is on borrowings. Our borrowing in even last few months has gone up. And with the operating performance, how much will it be? 315 crore is the last reported one. But what will be the current debt?
No, our September. Amit will.
So current debt is at 362 crores. We expect this to come down by around 8 or 9 crores in terms of utilization of limits, but it would be we would be closing at around 350 crores for the year.
And September was 332.
Right. And so now again, this year it was expected to come.
1 second. What was September? Okay, we'll continue.
And I understand the challenging environment, but the balance sheet deterioration is really fast for us. So, how comfortable are you? Would it be fair to assume that this now is surely peak debt for us?
This, Hiren mentioned that we were kind of taken aback with the kind of slowdown in the revenue, and hence we had to support the business with the extra borrowings to continue for the same. And with the austerity measures that we have taken place, I think so this should be the peak debt. At the max, it can increase to 360 or around that.
We already are at 360.
No,
so Dhaval, this 360 odd number, whatever is there, I am very confident that this would be the peak because, of course, few factors have played out to throw us off guard in this quarter. And, we, including some of the B2B deals, etc., that we have in the pipeline, they are cash flow accretive. So we are very, very confident that from here, in fact, we had intended to repay and reduce rather, but because of this challenge, that seems unlikely in this financial year. But we are very conscious about this. We have stayed conscious. We have invested always more than 80% of the investment has come out of internal accrual, and we don't expect this. In fact, we are confident that this is the peak.
And last, what is the inventory as of now? It was 738 crores as of September.
It is 727 crores for quarter ended December.
Thank you so much, and best of luck.
Thank you.
Thank you. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good afternoon, team. So my first question is, if I look at slightly, from the larger picture perspective, the overall construct is that, whatever effort that we are putting into, building this broadcasting business, but a large part of, our profitability and revenue is kind of driven by external environment. While the cost is something which we are currently, increasing every quarter. So given this construct, if the external environment is not favorable, let's say for 2 years, we don't know how the future plays out, right? So given that, how do you guys look at this construct given the balance sheet shape that we are in with 360 crore of debt, where we were actually earlier thinking that we'll reduce debt by 30 crores. So it's increased by 20-30 crores. So given all this, don't you think it's a good idea to consolidate first and then go for, more aggressive scaling up of the business?
Yes, I agree with you, and that's exactly what we alluded to, right? So, see, understand one thing, the construct of this quarter, this was a festive quarter, right? So, festive quarter is when everyone expects the revenue to be at the peak. So, therefore, the investments are also planned to peak in the festive quarter. And since that didn't happen, it's a double whammy that kind of resulted. Having said that, if the advertising scenario doesn't improve, obviously, and since the quarter went the way it did, we immediately we have put in a lot of measures to mitigate all of that, and strategically we are putting in place our next year's business plan and operating plan for the next year, and we will be looking at the whole approach in a far more, relatively more cautious way. Having said that, there are two things. So one is, no one knows how long this rural and advertising slowdown will last, because there are 3-4 different factors which have contributed to that. But at the same time, we don't want to end up taking a drastic measure which ultimately impacts the long-term opportunity that we all believe. And if we just take a step back, since you also, the question is from a big picture point of view, I think we all need to also look at it from that point of view, that if India is looking to grow from a $3.5-4 trillion economy to $5-7 trillion kind of number, then without consumption picking up, that's really not going to happen. And for consumption to pick up, and as and when consumption picks up, advertising, grows significantly faster than that, because of obviously, because of various reasons related to that. So I think structurally, if we all believe that this is the path of the economy at whatever 7%, kind of GDP growth rate, or 10-11% nominal GDP growth rate, then without consumption growth, that's really not going to happen. So I think, considering that, we also don't want to, take a step which kind of, compromises on the ability to take that. So we have to balance out both. And I fully agree with you. We are very, very, cognizant of that. And I think, given the context, however, as I said, in a short time frame, when the revenue expectation, the revenue shortfall is so high, or the market challenge is so high, to fully turn the ship around and, do it within a, few days is never possible. It does take its own set of time.
No, that part I fully understand. I'm saying more from, let's say, 2, 3, 4 quarters perspective. I understand that at quarterly basis you can't reduce cost, suddenly. That part is fully understood. My point is more that, generally long-term opportunity, you guys are convinced that is what you are trying to achieve. But generally good companies do manage short-term also by taking tactical decisions. And that's what I'm alluding to that.
So that we have already taken. So for example, we have shut couple of shows on our, our broadcast TV channel, etc. So that bleed we have already taken measures to, to do that. Orgo wants to add.
Yeah, so Dhanil, the point is, and understand your point and appreciate what you're saying. The only thing is, we have already taken, as Dhiren said, we have already taken certain measures to tactically manage the situation right now. But, the broadcast business, especially, original business, takes its time to get built. So, and completely taking knee-jerk reactions, basis. And yes, we don't know how the world will pan out over the next couple of 2-3 quarters. But at the end of the day, if we believe in the long story, in the longer story of the economy, and if the way we are poised right now with our channels and all that, we will be prudent, we will be careful, we will be cautious, but we will maintain the ship in a manner that we are able to cash in whenever the economy and the demand opens up.
Okay, fair enough. So since last quarter there was a World Cup and those kind of events, do you think that Q4, will be slightly better, at least both in terms of viewership and ad spends on the entertainment channels? And since we are already embarked on cost-cutting thing, at least...
So, Dhaval, viewership, yes. Dhanil. Viewership, yes. Okay. But from an advertising point of view, unless, as Dhiren said in his opening comments, unless the rural economy and the consumption really opens up, there will be continued stress on advertising. So that we are now, we are fully convinced, that this pressure is going to stay for some more time. Hence, yes, viewership will improve. But whether that will translate into monetization is something that we are not very, very confident of at least happening in the next 1 or 2 quarters.
Okay. So this 28-29 crore of,
Mr. Desai, I would request you to kindly join the queue. Thank you, sir. Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Manvardhan Vaid from Laurel Advisory Services Private Limited. Please go ahead.
Hello. Good afternoon, everyone.
Yeah.
So just quickly wanted to understand, the World Cup got over sometime in November, and we've seen 2 months, December and January, post the World Cup. So just wanted to understand what's the monthly run rate on the revenue in these 2 months so that one can kind of iron out what sort of the World Cup factor and same thing on the cost front also for these 2 months. What is the operational cost metric moving like? In September we were doing approximately 65-66 crores of operational revenue on a monthly basis in the September quarter, which is probably down to 50-51 in this quarter. So just wanted to understand where are we in December and January so that this World Cup thing...
Yeah. So, Manvardhan, I'll just break up the revenue part into two things. Firstly, so one is we have the deal-based B2B business and then there's the B2C business. So one of the challenges was that this quarter was that the B2B deals were deferred to Q4. So that will come in one or two large deals are expected to come in the Q4. So that is there, but the B2C part of the business, which has a monthly run rate, that rate which normally, so for example, to give you a different example, YouTube normally December is the highest month of the year. But in this case, this year, December was probably, at par with November. Okay. So, and what has happened, again to, bring back the point with which we started the opening comments is that because of significant allocation of expenses for the World Cup, a lot of advertisers' budgets have kind of been consumed or diverted towards that spend. So then their remaining spends have been tepid or lower actually. And that has impacted, and that is what Orgo was also alluding to, that the spends. So while for example, on YouTube, our viewership share metrics, operating metrics are phenomenally good. I mean, December we probably closed YouTube with one of the highest viewership shares on most of our categories that we've had, in many months. But the translation of that on revenue front due to these challenges, the startup ecosystem, etc., because of that, that translation into revenue has not happened. Even the broadcast viewership ratings and all, while they do fluctuate from time to time, but in general they have been trending upwards over the last few weeks. Again, translation of that on revenue front is relatively under-indexed due to the adverse external environment. Now, this external environment, whether it turns around in a few weeks or few months, right now no one is able to guess that. And if you read here, most of the people in the consumer business, they all are facing a challenge of demand, and which is kind of translating into their own discretionary spends and things like that.
Fair enough. Also, just wanted to understand, across our 4 channels, how much
may we request you to kindly rejoin the queue? I'm sorry to interrupt. For follow-up questions.
Sure.
Thank you, sir. We'll take the next question from the line of Prashanthi Dhruvi from Wealth First. Please go ahead.
Yes, sir. Good afternoon. So I'd just like to ask...
Sorry to interrupt, ma'am. Your audio is not clear. May we request you to use your handset, please?
Yes. Can you hear me now?
No, ma'am. It's still feeble.
Okay. Can you hear me right now?
Yes, ma'am. This is perfect. Thank you.
Yes. So my first question is that how reasonable is it for us to expect probably like a 24% growth quarter on quarter for the next quarter to achieve the FY24 revenue target, which is about 700 crores? That is my first question. And the second one is more generic, that in the presentation probably that you provide, investor presentation, is it possible for you to include more financial data and numbers for Shemaroo in general and not generic data that is relevant to media industry? That would be really helpful.
Okay. So to answer your first question, I mean, we've never given forward guidance on revenue and profitability, but 9 months we overall have grown at nearly 30% on a year-on-year basis on top line. So, I mean, if the momentum is maintained, that number, then it's an arithmetic calculation. But we hope that we are able to maintain the momentum. Second question regarding this thing, we have noted your suggestion, and Amit,
sure, we'll look into it and we'll get back.
We'll try and improve that.
Mm-hmm. So my first question is more on given that the rural demand is weak and we also cannot really predict how it will be going forward. It might change in the next few months or few weeks. So is it possible? How possible is it to maintain the same momentum, like 20-30% growth for Q4, or would you expect it to be better probably in FY25? That's more my question.
So I mean, there are various parts of our business, Shanti. If you had heard Kiran when he said that we have a B2B business also, right? So there is which is a lumpy deal-based business. So some of that deals which were supposed to happen in Q3 has got deferred to Q4 for various, operational, very mundane reasons, but it has got deferred. So it will come in Q4. So to that extent, those deals will deliver a certain kind of run rate which is required. But in terms of the B2C, to really predict whether we will be able to grow at 29%, 24% is right now a little difficult for us to say. But we will see how far we can go. If you see that our full year number is at 29% growth, but our quarter growth is some 4.6%. So there has been definitely first half we were growing at about 40%. So to that extent, the growth has come down, and we will see how the quarter goes. As I said, we do not expect the overall B2C part, which has the advertising-led business, to really kick in very strongly. Because of all the factors that we just talked about, World Cup and money being shut down. So we'll keep our fingers crossed and see. Right now, very difficult to predict what is the quarter-on-quarter growth going to remain.
Okay, got it. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Yash Kukreja from Equity Capital. Please go ahead.
Yeah, thank you so much for the opportunity, sir. So my first question is, in the last quarter, we have reported a revenue of around 200 crore despite the low ad demand. But this quarter, we have revenue has fell to 156 crore. So and I understand also this was mainly because of World Cup, but IPL is also lined up from the March. So how do we look at it? And the second is, in our investor presentation, two factors have been mentioned. One is reduced ad spends, and second is lower viewership. But on the contrary, our viewership has actually gone up from 7.4% to 7.6%. So how do we look at both of these things?
Sorry, what was your first question?
Yeah, so sir, my question was, IPL is also lined up from March. So how do we look at the demand scenario? So
Yeah, so you are Yash, right? So I think one first question you talked about Q2 being 200 crores and 199 crores and Q3 being 150 something, right? That was the first question.
Yeah, correct.
So as you remember again, it has been said probably again. We have two different parts of our business which is very different, right? There is one B2C and there is one B2B.
Yeah.
B2B continues to be a deal-based business. So, for example, our syndication businesses are all B2B businesses, all deal-based. So, in Q2, we had large, lumpy deals, both at a domestic as well as at an international level in terms of B2B deals.
In fact, we had shared that in the presentation also in that a good amount of that or that growth has been contributed by the B2B side of the business.
In our last Concall, our investor call in H2, after quarter 2, we had called that. So that was one of the big reasons there. If you look at from a B2C business, there is not much of a change. Going forward, IPL is something that we are, so World Cup was something which we had, was that kind of viewership and spend moving there was not really planned for. We were caught by a little surprise, and more than World Cup, while World Cup is coming out as a theme, but more than World Cup, it is the overall reduction in the ad spend, the softening of the ad spend is where the problem really lies. So the similar issue will happen in IPL, and we are obviously.
However, I would add here that IPL in many ways IPL is a planned event. World Cup comes once in 4 years. IPL is an annual event. So the entire ecosystem, is prepared for it in the sense that there are a lot of advertisers who typically participate in cricket, they they plan their budgets and allocate budgets for IPL, and within their overall budgeting framework, even the programming, etc. So new show launches, etc. normally get deferred to post IPL, etc. So on cost and revenue front, the entire ecosystem now is used to IPL and plans around IPL in general. So of course, and World Cup on the other hand is a once in 4 year event. And having said that, I would also add that the actual viewership and revenues or spends on World Cup actually were lower than IPL. Okay, but it's just the fact that in the tepid advertising environment, they took away money from traditional entertainment advertisers who were themselves facing a slowdown. That really kind of put everything off guard.
Got it. Sir, and my second question is, considering the deferral of the revenue recognition from the B2B segment, can we see an uptick in the Q4?
Yeah, we are quite confident that will happen.
Okay. And so my last question is...
On the B2B front.
Yeah,
got it. So my last question is, on the as far as our new investments are concerned, out of the total outlay of 75 CR, we had already spent 43 CR. So how much have we spent in Q3?
No, we shared that total is 71. So we spent in this quarter, it was 28 crores. So the 9 months is at 71. While we had projected 100 crores, 75 crores. In fact, that was the very first question of today's call, that the number has gone up. Is it because of higher cost or lower revenue? And I replied to that it is because of lower revenue.
Got it, sir. Okay. Thank you so much.
Thank you. The next question is from the line of Animesh Modi, an individual investor. Please go ahead.
Hello.
Yeah.
Yeah, good afternoon all.
Yeah.
Yeah, this quarter numbers are not up to the line and expectations, as we all know. But my question is that though income is not in the hands of the company, right? But as far as planned expenditures are concerned, we have already planned for this current year, so it's fine. But what we expect into the coming quarter or coming next financial year, that how much planned expense we are going to make, and do we have any policy that some percentage of the revenue we spend for planned expense, or it's just on numbers basis? This is my first question, and I will have one more question later on.
Yeah. So, I fully agree with you, and as I alluded in the opening statement also, that we have taken a lot of corrective measures, which are short-term tactical measures to at least, bounce back in the fourth quarter as much as possible. Our next year's annual planning exercise is underway. So right now, I'm not in a position to comment too much on that. But in terms of the thought process, I can tell you what we have been applying, and I don't think that will change. Is that we will, based on each business's plans, we will see where the overall position lines up, and based on that, what is available for us to invest, plus to we have a stated intent of bringing down the debt exposure. So with all of that combination, we would look at really how much we have available to invest and how we want to fit into that. That's one. Now that availability of investment, etc., is all, of course, based on various performance ratios and financial margins, etc., of each of those businesses. So it's ultimately it's a well thought out planning exercise that kind of flows through. Of course, it all assumes certain market conditions. If that market condition doesn't play out, then obviously this is what happened in this quarter. basically.
Yeah, correct. Because see, if income is not in our hands, but we can also plan in our expenses so that we can make our margins intact, right? And next question is, what is the current status of the GST surge happened, and what we are? Can you give some more light on this?
Sure. Amit?
Yeah. So there's an investigation going on by the GST department. There is actually no other progress as such, but there's an internal the paperwork, documentation, etc. is going on. Other than that, there is no movement as such from the last stated position.
Yeah, because the demand has been raised by the department, whatever it is.
No, there is no demand. No, there is no demand that has been raised till now.
Yeah, it may be some figure that has been there around 70 crores.
Some press has given some figures and all of that, which, we don't know anything about that. There is no official demand raised by the department. With this quarter, there would be some details, etc., that, we have cooperated with giving them. But as such, the next step has not yet been taken by the department.
So no formal demand letter or communication from department regarding an stated demand has come in?
So there is no show cause notice has been issued?
No, not yet. We will announce as and when we get the show cause. We will be announcing. We don't know when, how long it takes and what is the procedure, but at some point, we will have a show cause notice, and we will, of course, which we will contest and all of that. But we will announce it as and when it comes.
Yeah, sure. Thank you so much, and all the best.
Yes, thank you.
Thank you. The next question is from the line of Dhanil Desai from Turtle Capital. Please go ahead.
Thanks for the opportunity again. So, the question is that, the cost structure that we have built, is it fair to assume that in order to make a reasonable EBITDA margin, our revenue has to be upward of 900,000 crore, then only we can make, 15-17% EBITDA margin, because that's what it appears like. And a corollary to that question is that, so, in terms of to achieve that number, do you think that with the current viewership share and ad market normalizing, we should be able to get there, or we need to be even higher in terms of viewership share to get to that number where we can make respectable margins?
Dhanil, this is Ardu here. I don't know where you got that number from. Mm-hmm. Profitability obviously depends on various things in terms of how many originals. There's a lot of stuff. It's not very unidirectional. First of all, the biggest thing is what is the demand-supply situation in the market in terms of advertising as well as content from a content point of view. With the lesser, if the demand really is the function of the demand. If the demand is good enough, at even lower GRPs with lower original shows, you can monetize much better. The rates go up as a function of the advertising demand. So that is one piece. Secondly, in terms of our, we have a massive content library with us, right? How well we are able to monetize it during our various B2B deals, what is the kind of margin structures we are able to connect. It's a function of it. Secondly, we have embarked on a serious, aggressive plan on international syndication, which would mean syndicating content from global markets and for selling it to global markets. What is the kind of margins we make? So it's a function of various things. So I would not go into that. The point is, I think, as somebody asked in the middle, we have taken some tactical measures to ensure that we become a little more prudent and cautious while we do not sacrifice the overall long-term picture. And I think we are going in that path. And as Hiren has been saying in multiple calls, I've heard him say, we believe in that 3 trillion economy going to 5 to 7 trillion economy. If that happens, which we strongly believe it will, it has to be a function of consumption and it has to be a function of demand, and that will translate into advertising. So we are staying true to that course, maintaining the right. We want to increase our viewership share irrespective of anything else, right? Whether the market comes down, goes up, whatever happens, we want to increase our viewership share. We want to become a much bigger viewership share channel. So that objective does not stop. So I don't think these two are related. But what number will be profitable and all that, I don't think that is such a straight line answer.
Okay, got it. And I think, so on 9-month basis, how is our broadcasting business as a bouquet? Is it break-even? Doesn't look like, but I still want to confirm with you.
No, it's definitely not in break-even position. A large part of this investment of 71 crores has gone into the broadcast business. Or this quarter itself, 28 crores, what you are seeing. Large part of that has gone into this thing. So that is definitely the gap on that business. Having said that, as I mentioned in between, that for example, we have pulled back on a couple of shows, on some of the other cost aspects and all of that. So we are taking corrective measures, but as you can appreciate, you can't abruptly stop a show. You have to reach it to a logical conclusion, etc., etc. So all of that takes its own time to play out. We worked out some innovative, model with some, commercial model with some production houses to further reduce the cost. So there's a lot of measures that already, we have taken. And again, I would actually go back to someone in between us regarding the people cost. I think it's this people asset, which I am very confident will not only turn this ship around, will actually, take the business significantly way forward. And, they are excited about the whole, future. And everyone understands that this is a speed bump. But, everyone's extremely passionate and, I would say, very bullish and very committed to, achieve what we all have collectively set out to achieve. I think that, if you ask me, is undoubtedly the sentiment amongst our key teams.
Yeah, good to hear that. The only reason I asked this question is because we were to break even in second half of FY23, and it doesn't look like we'll break even in FY24. So going forward, are we kind of discussing that how to break even in FY25, or it will always be a function of external environment?
No, not really. Let me, we are getting into our AOP process right now, right? So, how we shape things and how we take things, that's all under discussion right now. Yes, I would say a large part would still depend on external environment. But having said that, there are tweaks which you can do with your overall positioning of the channel, where you want to play, how you want to play. There are various ways of managing it. We are re-looking at that, and it's always we always want to make the broadcast business profitable. Obviously, that is the objective. But we will continue to rely on external factors. But whatever internal possibilities and the ways and means of rejigging the channels and the various GPM models that we are thinking of, there are other ways of controlling which we are in the process of planning right now.
Okay. Last question. So we were to launch a new channel in this year. Are we still on course, or we are kind of relooking that?
So we deferred it, obviously, given the market conditions and all of that. But now, so we are ready with the channel setup, but we deferred it, obviously, because of the market conditions. And I think we'll soon be launching it.
Okay, got it. Thank you. All the best to you and Brian team.
Thank you. The next question is from the line of Manvardhan Pez from Laurel Advisory Services Private Limited. Please go ahead.
Thank you again. Just wanted to understand, in our existing broadcasting channel, how many hours of content are we sort of playing without the reruns?
So your question is on original programming?
That's right.
So on Shemaroo TV, we have 3 shows. which are original, two mythological and socio-mytho, and one is a crime show, which is a 1-hour show. On Shemaroo Umang, we actually at peak we had 5 shows, which we have brought down to 2, and we'll probably, so we are launching one more show next next week, which has actually just been announced. It's it is being launched with actually Balaji Telefilms is the producer. So that's the show we are launching next. So we are evaluating, but looks like we'll probably close the year with 3 shows coming down from the 5 that we peaked at. And on Marathi we have 2 shows.
Okay. So just wanted to understand, I mean, since sort of with 3, 2, 2, I mean, these are very meager numbers in terms of shows on these channels. So sort of what would attract an advertiser to come and advertise on these channels? And besides
advertiser, I don't think I don't think that is the correct thing to say whether 3 shows are good or 4 shows are good. I don't think that's the way to look at it. And that's not how it works. We have had channels working at great numbers and delivering great GRPs even with 4 or 5 original shows. So I don't think that is the question. It is also a function of the various qualities of the shows that you run and the kind of programming that you do. Remember, we also syndicate a lot of content, and a lot of the syndicated content are also first time in the Swedish market. So it's not just original. So I think that's what.
Yeah. So structurally, I mean, fundamentally, advertiser looks for audience. So I think that is what is the important thing. So it doesn't matter whether you have 1 original, 2 original, or no original. So for the first 2 years, we had no original when we were establishing, and still we had viewership and revenue. So it's actually advertiser looks for audience finally. So how we are programming with a combination of originals, reruns, and syndicated content is really about how we are able to attract the audience.
Okay, fair enough. So basically, okay, so maybe I understood it wrong in that way. So if we were to club all these categories together and without repeatability of any of the content, I just meant to understand what is the sort of the content that is for the number of hours that is being run, which is not being repeated again. For example, the same content which tends to be repeated during the day, and that way the original part of this content, whether
all content in all channels, right? So yes. All content in all channels is repeated. Okay, so all the prime time shows, whether I have 2 shows or 5 shows or 6 shows,
yeah,
they will be repeated to the daytime. So so you have a day part, this called RODP, day part. So they are all repeated. So you will not have shows that are not repeated. The question should have been actually how many original shows you are running.
So as I said earlier, that we run with syndicated or licensed content as well as original and repeat of original. That's how the programming mix happened. And actually, I mean, if you what I would advise you is that if you can probably go through our programming, you can see our channel live on various platforms. All our channels are live on various GTH and cable platforms. So you can actually, see the programming to understand. So, for example, in the morning you have a Bhakti part and, various programming slots are there based on audience consumption preferences and our own channel, programming strategy, etc. that we have.
Fair enough.
Mr. Bhatt, any further questions?
No.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah. Thank you so much. I think, thank you everyone for attending the Q3 call. And, of course, it has been a tough quarter, and we hope and are very confident that it doesn't disturb the long-term picture, and we are, fully on track for the long-term picture. Thank you so much, and see you in the next quarter.
Thank you, members of the management. On behalf of Shemaroo Entertainment Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.